Welcome to the Yield Investor YouTube channel. My name is Mike, and I am the author of Fix and Flip book called How to Invest in Fix and Flip Debt Funds. And the purpose of this channel is very specific. This is for accredited investors who are interested in learning more about how high yield debt funds work. Now, what I'm talking about here is these are funds that lend to contractors and fix and flip investors. And basically these funds are the bank. And so this channel is dedicated to education and really helping you understand who this is for, where this makes sense, and how these things operate. This is an alternative to things like REITs. People that are interested in high yield debt funds like this are typically wanting to avoid the volatility of the stock market or the bond market. And one of the interesting things too that we've noticed, people that are investing in high yield debt funds are those, a lot of times, are real estate investors. Maybe they were landlords at one point and they've shifted from being the landlord and they've taken their equity and they've invested it like a bank. Sometimes it's people that have done hard money loans and they don't like the idea of having hundreds of thousands of dollars with no liquidity and invested really in one deal. And so real estate debt funds allow you to diversify across hundreds of those types of projects, invest a fraction of what you would if you were the lender yourself in like one project. You can diversify and get consistent monthly yield. That's why these are so powerful. It's a pooled investment vehicle. They make short-term loans to real estate operators. Again, like I said, fix and flip operators. The investor is the lender. They're not the property owner. And the income comes from interest, not appreciation. So this is a unique investment product. It's a unique vehicle that's being used to smooth out cash flow and the volatility of other investments. So how is income generated? Borrowers pay interest. Typically, they're paying 12% to 14%, and the fund pays investors a preferred return, typically 8%, 9%, 10%, depending on how much they invest. And the spread covers the underwriting, the servicing, and the fund operations. The results are great for those who are investing. It's just consistent monthly income. Now, what you give up with these is you give up the appreciation. You give up, if you're, for example, investing in a singular project, say you've got $200,000 or $300,000 and you're directly lending on a fix and flip, you might get 12% on that, but at the same time, you've got risk. What if that project doesn't work out? You're going to have to assume that property as the investor. What if the person that you're investing with, what if they go bankrupt? So there can be a lot of risk with that kind of lending. So main takeaway, debt funds like this, high yield debt funds, are stable. They don't have a lot of upside in terms of capital appreciation, but they're very useful in a portfolio for consistent, 8%, 9% yield. Now that's annualized, but if people want to get paid monthly, these are things that people are using. Now they're often private, and so it requires kind of digging around and doing research to find out who has these, where can I find these, and then of course you want to do your diligence in discovering who are good operators in this space. That's basically the introduction. I hope that this is going to be educational. The idea is to really just dig deep on debt funds. Many people want yield, and I know that there are a lot of people using really crazy assets right now, related to selling covered calls that have huge MNAV depreciation, and there's a lot of crazy products right now for generating yield. And I know that there's just a hunger for yield in general, but how about, the idea here with this site is that this would be we're looking at a safer type of yield. No, you're not going to get maybe like 50% per year, but you're going to get something consistent and solid. And I want to explain how it's structured, how they work, how they operate, and then you can decide for yourself whether this type of product fits your situation. So in closing, I'd like to invite you, please subscribe, and then you'll get a notification whenever we have new videos. We do weekly breakdowns on the debt funds. I do have a free ebook. If you go to leadoutinvest.com/ebook, you can get a free ebook there, and it's a real great summary. You can probably read it in about 20 minutes, maybe 40 minutes. That's a helpful resource. You can join me on X at @YieldInvestor for daily insights and different things that I'm following and looking at. Thank you for watching, and I will see you on the next one.